So let's look at 15.2. We are going to be focusing in this lesson about doing the adjusting entries for the merchandise inventory we have at the ending. And so the physical count on the merchandise inventory on December 31st is given to us, and we have to use the adjusted trial balance to help find out where the starting inventory was. The other thing that we'll be looking at is we need to also account for any interest that has accrued in the year. And so we will have to calculate that amount as well. So let's look first at the adjusted trial balance for how much merchandise inventory we had. And we had $94,000 and $94,845.31. When we actually look and see how much inventory we have on hand, we have found out that the balance is off. The merchandise inventory is actually more than what we accounted for, so we need to add more to the credit column for that. And so we subtract the two numbers, and this time it's going to be added to the credit column. The difference was $1,625.94. That is going to be added to your merchandise inventory and this was done again on the 31st as we're doing it at the end of the year. And the credit account is going to be that income summary. I told you the income summary was about to come back into play. It's our holding place for where some data goes until we can reconcile it. So the holding place is the income summary, and it receives a credit total of $16.25.94. Now we need to take care of the notes receivable. We have an 8% note that was signed on the 21st or 22nd of November. We need to adjust for the entry for the interest receivable. And so we are going to use the adjusted trial balance to find out how much was the note. The note was $8,000. It was signed on November 22nd, so if you count from November 22nd to end of November, you end up with 8 days, plus the 31 days in November, or in December, gives you a 39 days. And you're going to take, and just remembering how the formula worked, you're going to take your 8,000 times, you're going to do your 39 divided by 360 times your interest rate, 0.08. And that gives you $69.33. And so that's the amount that we're going to note, and that's going to come into case of interest receivable because it's not in yet. And this was done again on the 31st. And we received $69.33. And then this is going to be for the interest income, which is when we go over here to, I don't have them listed. When we look at our account types, that's going to be as a revenue account. It's a way of money making. And so that's 69.33. And you'll do that on your own to get by yourself, and then do the application problem.